Sherry Kaiserman is the head of advanced securities at Wedbush. She's the spearhead behind their advisory and investment in the blockchain and Bitcoin ecosystem. Sherry's going to talk, she's going to do more of a broad-based sort of overview on blockchain, its relation with Bitcoin, and summary of several use cases that are evolving in the marketplace. Steve will follow, and he pretty much has free reign to talk about whatever he wants. He's gonna draw on his deep pool of knowledge. I mean, you all have the programs and see his background as well. So Steve will kind of continue with the flow. Before we get started, I know this is kind of a long preamble to getting going, but I want to take a brief survey. So how many of you in the audience actually own Bitcoin or a cryptocurrency of some? Okay, that's a pretty good crowd. So for those of you at home, where's the camera? Probably 30%, 40%. Okay, and those of you that don't own it, how many of you are interested in owning a crypto or are open to investment in that? Okay, 15%. How many of you, and this goes back to the whole audience, how many of you feel like you could comfortably describe what Bitcoin is and how it's valued? Okay. Good. 5 hands for the home crowd. So that's why we're here, right? So with that, I'd like to introduce Sherry Kaiserman and take it away.
Blockchain technology and cryptocurrencies, improving lives and transforming businesses. Let's take a step back and remember the early 90s. Technology, the mobile cell phone was so exciting to actually be able to walk down the street and have a conversation and hopefully have a conversation. How many people here would have believed me if back then I said to you, your cell phone in about 25 years would be called a smartphone, and it would be more powerful than this mainframe, this IBM mainframe? Okay. Keep that in mind. The technology behind what powered email, Netscape, led to the ability for your phone to become your primary camera, your primary video camera, and not only an interactive map, but one that would tell you where the best traffic routes are. You can stream any music, your whole library, and then some on your phone. You could watch a movie and possibly even get rid of your TV. And not only that, you can take your phone and remotely record something from your home DVR, which you wouldn't have known what that was. And travel agents, greatly diminished profession because we all just go straight online and cut out the humans and book our travel plans without them. But could you have imagined that you would one day rent a room in your house to a stranger to make some extra money? You would potentially have a job driving strangers with your car and not have a boss to report to. Your phone could do free video conferencing. You'd have an app store. It's an app store. It's a place where you can get thousands of different things and whatever you needed. If you needed a flashlight, you can download a flashlight and your phone becomes a flashlight. You can get rid of your credit cards. You don't have to carry those around. You have your phone. You can tap and pay with your phone. You can order anything from anywhere and have it delivered to you in almost any time shortly. And if you lose that device, you can go to another device and find it. How amazing. Think back. In the early 90s, would we have imagined all of these things? Blockchain and cryptocurrencies today are what the cell phone and the internet was 25 years ago. It's all about the blockchain technology, which is the technology that powers Bitcoin. And this is the next transformative technology to change society worldwide. It enables decentralized peer-to-peer exchange and record keeping of anything. There are countless use cases that are being developed and adopted by governments, corporations, consumers, and the naysayers, like Jamie Dimon, who say Bitcoin's a fraud. Sorry, JP Morgan. They're missing the big picture. And I know he claims, he understands the technology, and clearly they're making lots of investments, as everyone is. But when you discount the cryptocurrency, I think there's a disconnect. So about every 20 years or so, technology brings on a transformative innovation. We had the personal computer in the 70s, which gave way to a booming software industry. We had the commercial internet, the internet of information, which changed how we communicate and consume data and really sped everything up in our lives, from the spread of ideas to being able to grow a business. And the Internet of Value, which came about in about 2008, 2009, is all about blockchain technology, which enables machines to validate trust and transform how we store, exchange, and manage anything of value. So what is a blockchain? Right now, we're just going to talk about a public and permissionless blockchain, like Bitcoin, versus there's also private and permissioned blockchains. So a blockchain is an append-only digital ledger, time-stamped. The data is time-stamped, it's non-alterable, and is trusted. It's decentralized, so no one central authority owns it. Instead, a copy of this digital ledger sits on computers distributed throughout the world. And it's available to everyone, creating transparency and access, and allows for peer-to-peer transactions with no intermediary needed. So a blockchain can keep track of anything of value, be it money, securities, goods, voting, healthcare records, anything. So blockchain technology is also referred to as digital ledger technology. So think a shared accounting ledger versus everybody having their own siloed record keeping. So imagine what can be created 25 years from now, and because of the internet, it's probably going to be 15 years from now, with a decentralized technology. So there's no one single point of failure, like Equifax. It's accessible to all, so it truly can impact people in developing countries. It creates a ton of efficiencies with smart contracts, reducing redundancies. It improves security, reduces fraud, protects asset rights like land title. I'll get into that a little bit later. Lowers costs because you're removing the middleman who take lots of fees, which has been my profession. It decreases the capital requirements because everything is sped up, and it decreases the risk and the need for trust because this is machines becoming that trusted entity. And it will allow for all these different new business models. Currently, we all don't own our own data, but in a blockchain world, we can, and we can monetize that data. There's micropayments. There's lots of companies doing things. Imagine if you could just pay a fraction of a cent, and what kind of business model can be developed with that. And it just essentially takes control away from the big centralized entities and gives it back to the people. And that's the excitement of the ICOs, which is an initial coin offering. How many people have heard of an initial coin offering, ICOs? Yeah. All right, so there's three key principles of blockchain: security, consensus, and incentive. So cryptography is what creates the security. The decentralized distributed network has to come to a consensus to validate transactions. And the system embeds incentives to want to get people to contribute their computing power. So let's take these one at a time. Security. Cryptography is used to create a digital identity, a signature, kind of like a password. And this requires the asset holder to have the combination of a private key and a public key. And when the owner of that asset wants to broadcast their intention that they're going to transfer their asset to someone else, they use their private key to announce that, and they send it to the recipient's public key. And this essentially authenticates the ownership that this person does have this asset and can transfer it. The decentralized network is fundamental to blockchain's security. The more nodes on the network, the more decentralized. If it's public, it's even more secure. And there's, again, no single point of failure. And you'd have to, because consensus is necessary to validate a transaction and process a transaction, you'd need at least 51% control of that network, and that's called a 51% attack. So when a consensus is achieved, transactions are validated on the block, and computers all start this race. At least that's in one of the consensus protocols called proof of work. And they race to solve this mathematical problem, which results in the information in the block getting hashed. And I'll go through this a little bit more, but just to give you some feeling of, so this information that's in the blockchain becomes an alphanumeric string of letters and numbers. And what's interesting about the blockchain and why you can identify fraud pretty quickly is that this hash in this new block that's added to a blockchain contains a random piece of data called a nonce, the data of the current block, and the hash of the last blockchain. So if anything gets changed in if someone tries to change the network and something in a prior block, it's going to change the hash of the subsequent blocks, or if they try to change something in this block, it changes the hash of the subsequent blocks. And so immediately you realize, okay, this isn't right. And then the incentives to support the network. There's two ways to incentivize a miner or a node, which is a computer on the network, to be on the network. And that is rewarding that computer, or that miner, with newly minted cryptocurrency. And also, within a block, each transaction has transaction fees associated with it. So that was a lot of information. Let's use Bitcoin as an example to take you through. Again, it's all about the blockchain technology. Bitcoin is merely an application of that technology, just like email, Amazon, Netscape, all applications of the various internet technologies. So in 2008, Satoshi Nakamoto, whoever he, she, they may be, published a white paper called Bitcoin, a peer-to-peer electronic cash system. Who here has read that? I suggest you read it. I'm not a technology person by background, and I read it and I understood it, at least the first few pages. And it really was easy to understand and made a lot of sense. And there's two main components of Bitcoin, and one can't exist without the other. The cryptocurrency, which is a medium for exchange and a store of value, and the technology, which is the disruptive payment network. So when people talk about Bitcoin as the solution to trust, there's typically two stories that are told. Not a story. Double spend problem is Bitcoin is the solution to the double spend problem. So in the internet, if I send an email and I attach a picture or a PowerPoint, you're getting a copy. But with assets like money or stocks, it can't be a copy. If I'm going to send you $100, I can't then also send you that same $100. So how do we make sure that doesn't happen? Right now, we use trusted intermediaries to facilitate that. Bitcoin solves that problem. The other story that you may hear about is the Byzantine generals problem. And that's a distributed computing world story, where it illustrates the possibilities of communication failures among two or more parties. So the generals need to all agree on a time to attack a castle, and they have to make sure that they all get the right time and that they all do it. But how do they trust the messengers who are going from general to general because they're geographically dispersed, and know that the messenger didn't get captured or he's not a traitor? So how do we solve for that? Trusted intermediaries. Blockchain establishes trust via machines and eliminates the need for these trusted intermediaries. So the basics of the Bitcoin blockchain. It truly is fascinating how Satoshi Nakamoto thought of this great idea to create a peer-to-peer electronic cash system. And in the old world, if he had this idea, or she, or I'll call him he, it's easier. If he had this idea, normally he'd say, okay, I need a bunch of computers, I have to hire people to run these computers all over the world, raise some money, pay people. But he came up with this idea of incentivizing people to put their computing power on the network and reward them with an incentive. And so Bitcoin is the Bitcoin blockchain is a digital ledger that keeps track of every single Bitcoin transaction in history. And the incentives to run the Bitcoin software are the Bitcoin, newly minted Bitcoin, and transaction fees associated with every time there's a transaction. And contributing one's computing power to the network to earn Bitcoin is known as mining. So Bitcoin mining is more than just about minting coins. So people say, oh, I want to become a miner, I'm really interested in cryptocurrencies, but there's a reason that this mining is occurring, and that is what secures the network and is both the mechanism to create new Bitcoin as well as to verify and process transactions. So copies of the Bitcoin ledger sit on computers geographically dispersed around the world. And when person A wants to send money to person B, a consensus of these computers need to agree that person A does own what they want to send to person B. And they can do that because they all have a copy of this ledger that has the history of every transaction. So they can see that, yes, oh, I see Sherry has a Bitcoin in her wallet, she acquired it here, and yep, she can send it. This is a valid transaction. So if it's legitimized and validated, the transactions gets grouped with all the other transactions that took place in the last 10 minutes, and that's what's going to form the next block. The computers then all race to solve a complex computational puzzle, which takes 10 minutes. Pardon me, which takes 10 minutes to solve. And if the machines start learning and it does it faster, then the algorithm increases the difficulty of the problem. So there's two different ways that consensus can be achieved. Not two different ways, but the most common ones are proof of work and proof of stake. Is anyone familiar with those terms? Okay. So proof of work, Bitcoin and Ethereum, the largest public blockchains currently use proof of work. And that means miners compete to do that complex puzzle and solve it. And it is incredibly energy intensive. It takes really expensive ASICs, computer equipment. And the probability of mining and actually getting Bitcoin is related to the amount of power that you contribute to the network. So it could be a very expensive proposition. And again, to defraud the network, you would need to get that much computational power and spend that much energy trying to get 51% of this network, which is likely going to be a lot more than the amount you're trying to defraud. Not worth it. Proof of stake, there are no miners because there's no cryptocurrencies being mined. Instead, they're called validators. And it's a lot more efficient because when all these miners are racing to solve this puzzle, there's only one miner that wins. So all that energy and all that effort was utilized and results in nothing. So there's a lot of wasted expense and effort. With proof of stake, all coins exist from day one, and how many blocks you mine depends on how many coins you actually own in the system. And there's two different ways that you can reach consensus in proof of stake, and that's either every node on the system has to sign off until there's a consensus reached, or a random group of signers are chosen. And the validators likely have a deposit, and if they're trying to hack the system and they're not following the rules, then they're going to lose that deposit. So again, is that if to get 51%, probably not worth what you're trying to hack. So Ethereum actually currently relies on proof of work, but is looking to switch to proof of stake because, again, it's a lot less energy intensive and less expensive. So mining Bitcoin and adding a block to the blockchain go hand in hand. Or mining any cryptocurrency that has a native blockchain. So once the miner solves the problem, he sends the solution out to the rest of the network for verification. And if the network agrees, again, that this is the solution, then that miner is rewarded in Bitcoin, as well as those transaction fees. So why is the Bitcoin network so secure? Well, despite constant attempts to hack it, it's never been hacked. Websites or wallets that exchange Bitcoin have been hacked. But that's no different than robbing a bank. People say, oh, Bitcoin isn't good, it's used for illicit purposes, it's been hacked. No, so is cash. The decentralization of a public blockchain is fundamental to blockchain security. Again, because there's no single point of failure. The Bitcoin network continuously gets stronger. It's open source technology, and the developers are continuing to improve it, and there's soft forks, improving the code and taking it in a slightly different direction. Soft fork is backward compatible, and then there's also hard forks, which is a little bit messier progress, but it's still progress and improvements. In July, we had a hard fork where Bitcoin Cash was created, and Bitcoin went on with improved technology. So Bitcoin has been incredibly resilient, and every time there's a setback, it seems to make new highs. This is just a diagram, if anyone wants to see it a little more. I just have it in there. Okay, so Bitcoin supply. There will be a cap number of Bitcoin. 21 million Bitcoin will be in circulation by 2140. Again, it takes a miner to solve the mathematical problem about 10 minutes, and that coincides with a new block being formed. So and then the rewards come. So every 10 minutes, new Bitcoin are created. So originally, when it first started, a Bitcoin miner would earn 50 Bitcoin, and every 4 years, the amount of reward halves. So in 2008, it was 50. In 2012, it became 25. In July of last year, it became 12.5. And in 2020, it'll go to 6.25 Bitcoin. So you may be asking, what's going to be the incentive for miners to stay on the network and continue to mine if they're not getting rewards in Bitcoin? But hopefully by then, the transactions will be so plentiful that they'll be just like the Visa and the MasterCards, and miners will actually be called transaction processors, and they'll earn transaction fees that are enough to incentivize them. Or they'll switch to proof of stake. Valuing Bitcoin. Why is it selling where it's selling? Well, Bitcoin, the cryptocurrency, is really equity in this payment network. The more people are using the Bitcoin network, the more in demand Bitcoin will be, and the likelihood of the value increasing, it'll go up. So currently, there's about 16.7 of the 21 million that are in circulation. And the price is about $5,500, so it's about a $92 billion market cap. When you think of how can I compare this? So if more people are using it, then the price of the Bitcoin being in higher demand should go up. So if we have $8 trillion of gold held worldwide, and Bitcoin took 5% of that as a new asset class, because I'll tell you, we have $20 trillion of wealth that's being transferred from the older to the new to these millennials, and I don't think they care about having exposure to gold. For them, it's all about cryptocurrencies. So if Bitcoin got 5% of that, it would be worth $25,000. According to the IMF, foreign currency reserves supporting cross-border trade, which Bitcoin is another great tool for, or blockchain technology, is about $7.5 trillion. 5% of that, again, close to $25,000. And what percentage of the $200 trillion that's held in cash and stocks and bonds and gold will shift into this new asset class? Could it be 1%, $2 trillion worth, or $100,000 of Bitcoin? Who knows? But I think that the more use cases that utilize it, the greater the value, because there's this fixed supply. This is just a chart of the Bitcoin price, which has really accelerated recently. So why use Bitcoin? People who poo-poo and say, oh, we don't need Bitcoin. Well, we don't need it in a developed country. We have credit cards, and people here are using it for trading speculation, as a new asset class, illicit activities. Lots of people here are starting to use it for money remittance, though, and sending money overseas to family in developing countries. But when you look at developing countries and what this does for them, like in Venezuela, where you have hyperinflation, and their currency is just going like this. I don't care that Bitcoin is volatile. I'd rather be in something that's like that than something that's going like that. And they're starting to use it to number one, receive money from other countries, from their family. They're using it as a currency to purchase goods and services. And it's a great tool to access and a great asset to access when there's political upheaval in a country, and it gives them access to the financial system. So blockchain technology is transformative. And it's not just for financial assets. The internet allowed information to be digitized, and blockchain allows any asset to be digitized and securely transferred over the internet. And Ethereum, Vitalik Buterin, was inspired when he saw this Bitcoin open source code, and he developed Ethereum, which is another blockchain that is really easy to code. And he made it easy to create smart contracts, self-executing contracts that just execute when certain conditions are met. And then this ERC-20 protocol, these tokens, all these ICOs are based, many of them are based on this ERC-20 protocol, which is it's a standard for token creation. So people aren't reinventing the wheel every time they want to create a token for their company. Now it's really simple to create a token and have that be part of we'll get into ICOs. That's probably, but it makes it easy to create a token. And they established the Ethereum Enterprise Alliance, which has over 150 participants of companies and governments that everybody's heard of, and they're all learning and trying to leverage the Bitcoin blockchain technology. So disruption is coming for all intermediary businesses. And just quickly, remember I said there's public and permissionless blockchains. Anyone can use them. Well, there's also private and permissioned blockchains, which is really where the banks are working on, and any company that is really, really concerned with privacy, they're all going through private blockchains. And this is actually viewed in the Bitcoin world as, or the blockchain world, as analogous to the intranet, when companies they didn't really want to, be totally open, versus the internet. But a private and permissioned blockchain is you control who's in this network and what rights they have and who can operate a node, and it's faster, and you can fix issues. But it's not as secure because, if everybody in that network really wanted to change something, they can. So it's also viewed as maybe a next generation shared database. And there's over 1,000 cryptocurrencies now that are traded on various exchanges. The market cap of all cryptocurrency is $172 billion. The top 4 represent 80%, Bitcoin being about 54%, Ethereum, the next largest, XRP is Ripple, which is a private blockchain, and Bitcoin Cash, and LTC is Litecoin. So you can see the first 2 are really significant. And again, cryptocurrencies are the mechanisms that are used to incentivize and exchange value on the public blockchains, not necessarily public, but on a blockchain with a native, or exchange value on a native blockchain. And tokens represent any asset or utility that's fungible in a decentralized application that utilizes an existing blockchain, like Ethereum and Filecoin and all these ICOs that created these tokens. Okay, here's just a visual of all the different potential applications where you can use smart contracts as a digital currency, record keeping, and securities. But let's go briefly through initial coin offerings. This is an application of blockchain that is disrupting venture capital and really democratizing investments, ownership. It's non-dilutive, liquid venture capital. So the example that I heard that I love is, just picture in the old world, you would invest in the application layer, and everybody in the application layer would make a lot of money. So Airbnb, someone has this idea for Airbnb to create this great company that aggregates everybody else's houses, and the owners and investors of Airbnb get wealthy, and all the people, the users, putting their property on and accessing the properties don't make anything. They get the service, but they're not rewarded with anything. In the new world, you're investing in these tokens, which is part of the protocol layer. And so what if I needed a token to rent an apartment or a house, and when I offer my house to get rented, I'm paid in that token. So then the more Airbnb starts to be in demand and grows, then the value of those tokens, there's going to be more demand, and the value should go up. And I just lost my train of thought. But in any case, so it also, so the users also become evangelists for the company. So they're in a sense like shareholders, because the more people are going to use the service, the more their tokens will be worth. So in hindsight, if someone said, I can sell you shares of the internet, and anytime someone uses a service on the internet, you can earn money. Would you invest? So ICOs have been incredible. Ethereum was, in 2014, one of the first that had a crowd sale and raised $18 million in 42 days and at about 30 cents, and currently it's over 300. Filecoin was the largest one to date. It raised $262 million. 200 of that was in less than 60 minutes. I mean, this is giving people all over the world access to capital. And I can go into it more, but I think Steve is going to talk more about this, but we can talk it after if you have questions. So the amount of money raised in ICOs in 2017 is now greater than the amount VCs have invested in blockchain, and it's over $2 billion. Most of it's been since June, July. And so here's just the comparison of the amount raised in VC funding versus ICOs, and then you can see how, on a monthly basis, the new ICO funding has gone. Incredible. So let's just flip really fast through the use cases, because this is what blows my mind. Like, every company in every industry, not every company, but major companies in every industry are all hiring people to figure out how do they utilize this blockchain technology. One, because a lot of them will be replaced if they don't figure out. And secondly, it's innovative and it can create new efficiencies and save lots of costs. So access to the financial system now for 2 billion people that are unbanked, all it takes is a cell phone, a smartphone, and access to the internet. And you can send Bitcoin from a mobile to a mobile and cut out the Western Unions of the world who take 8 to 15% of that money. I think just as developing countries bypassed wired technology and went straight to wireless, I think they'll bypass the banks and in the financial system, and they'll go straight to finance on the blockchain. And just some stats, there's $600 billion a year that are sent by international migrants to their families in developing countries. And 73% of those have no access to bank accounts. And it's really a pain in the butt, too, to get to a Western Union, or it's far, it's complicated. And businesses spend $155 trillion in cross-border payments, and they have about $1.7 trillion in operational costs that go into supporting that. Oops. So blockchain speeds up and simplifies cross-border payments. And you've got companies like Abra that allow you to send money from my mobile to a family member in Peru, who then gets this message, and they look up for a 5-star teller, and they see that, oh, there's a teller just down the street from them, and they go to that teller who deals with the Bitcoin, who gets the Bitcoin and gives them their currency. Ripple is helping real-time cross-border payments between banks in seconds, and you've got 75 clients, including Bank of America, RBC, Standard Chartered. There's 47 banks in Japan that are clients of theirs. Microsoft just announced they're using mobile payments for the unbanked based on Ripple. JP Morgan just announced a couple of days ago that they have a new interbank platform based on their Quorum blockchain, which is based on the Ethereum blockchain, but it's a private blockchain that they created. Wall Street, clearing and settlement of trades. Clearing equals, or trade equals settlement. It's just a change in the ledger. So it can create tons of efficiencies, speed up transactions. You won't have T+3 anymore. It'll just be instant. And Accenture says that can save $10 billion a year. With smart contracts and digital, plus a digital ledger, it'll automate workflows and cut out lots of back office people and cut lots of costs. NASDAQ is using the blockchain to keep track of private companies' cap tables. And the state of Delaware, even for incorporating new companies, in the past, you had to incorporate and issue shares, and now it's together in one on the blockchain. And apparently, there's lots of errors in cap table management, and that should, because it's simultaneously issued and accounted for on the blockchain, you should not have those kinds of errors. Derivatives. At the end of 2017, the UK's Royal Mint and the CME, they've gotten together and they're trying to create a tradable Royal Mint gold, RMG. 1 gram of gold is going to be 1 token. International trade finance. What a manual process. Involves 30+ pieces of documentation, hundreds of copies, 50+ people involved, and imagine if you can just cut that out, and everybody that's involved in this just accesses this one digital ledger that has all the information they need where they can go, and you've got lots of different companies working on that. Supply chain management. I don't know, has anyone seen the commercial with IBM and with a tomato on the blockchain? What's that about? No? No one watches TV. So if I go to a store and I have to trust that this tomato is organic because it's a label that says it's organic, am I going to prefer to buy that one or one that I can scan a QR code with my phone that will tell me exactly where this tomato originated, went, what pesticides, when, whatever, the whole history of this tomato? You going to trust the one with the sticker, or are you going to trust the one that you know is trusted? Walmart is testing the blockchain with IBM, and they're focusing on tracking pork in China, so when they get tainted meat, it no longer takes them days to figure out where it came from. It takes them minutes. Identity. Refugees. There's so many people that 1.5 billion people that don't have legal identity. Their papers get ripped up, the governments destroy it, what have you, and Microsoft and Accenture just unveiled global ID system for refugees. Imagine a refugee can just take out their phone and prove who they are. Land registry. Peruvian economist Hernando de Soto has talked about this a lot and how the blockchain can really impact economic mobility in developing countries. Because if you can't prove that you own this farm, you have a piece of paper that says it, but if the government all of a sudden decides, there's a new dictator that comes to power and the government says, oh, I see you have a piece of paper that says you own this farm, but no, my friend owns it now. If it's on the blockchain, it's immutable data that it's there forever. It's yours. And you've got Bitfury helping the government of the Ukraine. You've got Factum in Honduras, and lots of countries are looking at putting land title on the blockchain. Healthcare. I can't wait to go to the doctor, a new doctor, and not have to fill out my health history again. Patients will own their own data and give access to whoever they need to, and all my data will be associated with me, so when I go to my doctor at Cedars, and I have another one at UCLA, and they each took tests, I don't have to deal with getting the records, it's gonna be there. You've got lots of companies, Philips Healthcare, they formed blockchain labs, Pfizer and Genentech, also trying to protect the medical supply chain from counterfeit goods. The Estonian e-health authority putting secured medical records on the blockchain. The Internet of Things. So IBM, I heard, has 1,500 employees dedicated to blockchain, and then on CNBC the other day, I heard they're looking to hire another 150. That's significant. I heard, I was at a conference the other day, and there was a company, NEM, talking about these smart certificates to control internet-connected devices. And so the owner of the device, through their private key, is the only one that can do whatever it wants with that device. I mean, imagine you have an self-driving car, and the cyber hackers come and they shut people down. If blockchain can give us the security, because you can trust a machine to machine, the internet doesn't know you're a refrigerator or a car. Toyota is looking at developing things to get accurate information and be able to charge appropriate premiums. You've got the country of Nigeria hoping that blockchain is going to raise awareness and discourage crime and protect consumers and unlock new job opportunities. Advertising, I mean, every industry, all companies of all sizes are all looking at how they can utilize this technology. So, in summary, any technologists and developers and entrepreneurs dream up the unimaginable that this technology can and will create. So blockchain is a decentralized ledger, enables any asset to be digitized and kept track of, updated securely, eliminating the need for manual, duplicative processes and the need for intermediaries. Bitcoin, public blockchain, it's a disruptive payment network, and a digital currency that seems to be becoming a new asset class. And again, it's just one application of blockchain technology. So I think 25 years from now, 15 years from now, we can't even imagine what is going to be created. I mean, once we had Google and Amazon, we thought all those companies were amazing, and then it was another 10 years after that where the sharing economy came to be. So God only knows what will end up being created with blockchain technology, but what it does seem is that lives will be improved all over the world. Businesses will be able to streamline and create lots of efficiencies, and disruption is coming. And the disruptors will be disrupted, because I think every company today should expect blockchain versions of themselves. So blockchain is just as or more transformative than the internet. And I like this new definition I heard. The blockchain community is so incredibly inclusive and really,
Radically inclusive.
Unbelievable. And so Brock Pierce said the new definition of a billionaire in the blockchain world is someone who impacts the lives of 1 billion people. And that's truly incredible. And I can't wait to see what this technology brings.
That was great, Sherry. Thank you very much. And I have a couple of things to say. One, for the record, where's the camera? Jamie Dimon, I love you. All right, so we're on good terms, and I'm not holding anything. I'm not going outside the lines here. Also, the provenance of organic fruit and vegetables. I love that. Think about that, right? Exactly. I definitely would opt for the skin. Get it back together. Please welcome Steve Beauregard, Partner and Chief Revenue Officer at Block. Bring it down. All right. Thanks. Steve, take it away.
All right, mic check, mic check. Thank you, guys. So I'm going to take a little bit of a different approach. So I think I'll start with the story first, and then I think what I want to do is I want to have open mic and then open it up to a bunch of questions. She's already covered most of what my slides are going to show you anyway, because there's only so many things you can talk about inside of the blockchain space. But I'm going to talk about a story about how I got into the Bitcoin blockchain business. By way of background, I used to be a software developer, also an accounting degree and a computer science degree. So sort of both the business side and the technology side. So I started as a programmer for a lot of years, and then I went to work for Digital Equipment Corporation. Which brings me to my first favorite slide here I like to show is, read the top left. There's no reason anyone would have a computer in their home. That's from Ken Olsen from DEC. It's a brilliant statement. Okay, let's go to the next one. Google's not a real company, it's a house of cards. Steve Ballmer. Netflix isn't even on the radar screen in terms of competitors. Blockbuster. The iPhone belongs in a car, in your pocket, not in a car, and that's not so interesting. And then my favorite, I'm sorry, JP Morgan, Bitcoin is not a real thing, it's a fraud, it will blow up. So what's the common thread here of each one of these things, each one of these statements? They're scared. They're scared and they're trying to protect their market. Another one that's not on here is I was one of the first BlackBerry partners in the early 2Ks. And actually, I signed up in 1998 when this thing was called a pocket link. I was like, you got to be kidding me. This thing can send two-way email? That's awesome. And first thing I did is I ran out and I bought the stock on the Toronto Stock Exchange at $7. Smartest thing I did, right? No, I should have gone to work for the company. Because the guys that came in to sell me are like worth 50, 60 billion. One of them's over here running Sonos. So Patrick Spence, a friend of mine. Anyway, but they were all trying to protect their market. The BlackBerry guy got up on stage at one point and said, BlackBerry is never going to have removable storage or a camera in their phone. And I was like, that's a mistake. I heard him say it, it's like, that's a mistake. He's wrong, and the reason he's saying it is because he didn't have one. Right? I read a report from a private wealth management company, and a friend of mine from college says, hey, will you read this for us? We just want you to, your 2 cents. It's a big blockchain paper. So I read through the thing, and I go down, and it's really brilliantly written. It's almost as good as Sherry's presentation about thoroughly showing like the ecosystem, everything that's going on, all this excitement, and then they get to the summary conclusion. They say, we don't recommend that you buy cryptocurrency or invest in this at this time. Okay, 300% over the last years. If you look at it logarithmically, 8 years in a row where 300% don't buy into it. Why? Because they don't sell it. That's not a product they have for their customers, so you shouldn't buy that. Bad idea. So all these guys are trying to protect their own markets and what they have going on. All right, so if I look back at my career, I've always been sort of in this space of that bleeding edge, and I love it there. It's my favorite place to be. You know, in the early days, I started my career with DirecTV, starting satellite television, launching satellite television to the US, then into South America, and these markets. And a lot of the things that we see now in the new technologies with the unbanked are very similar to the kinds of problems we saw like in Sao Paulo, Brazil, with very, very poor people, and you're trying to give them some new technology and figure out how you make that work in concert with what we see. Then it comes the internet. And that's when I got into building websites in the early days. And at some point I realized email is going to be more important than the telephone for business. So we started a large practice of integrating big-scale email systems like Lotus Notes and Microsoft Exchange, and that's what led us into the BlackBerry business. And when the BlackBerry business came about, it was like this 5-year distraction. It was like we were in this euphoria of just selling these gadgets, and it was so easy to sell. We called them crackberries. And we said, this is like we're drug dealers, and these guys just can't get enough. Everybody in Hollywood had one, all the lawyers had one, everyone had to have these gadgets. But I really embraced the technology because I wanted to see what's the next innovation. So then we got into building mobile apps, and boy, was that total torture. We were in the early days when your connection was bad, things would time out, and the user experience was horrible. But we knew that it was going to get better, knew it was going to get better. So then we get into all of these social collaborative things, and I started working on some different business plans. So also by way of background, I've been sort of a serial entrepreneur. A lot of the years that I was doing these businesses, it was as a service practice. So we were building software solutions for large corporations. We were doing big systems integration projects, Y2K projects, then building mobile apps for other people. And the reason I decided that I wanted to go into a different type of business is we built this awesome claims processing system for a company in Calabasas. And then they sold it. And they sold it based on all of the work that we had done for this online claim system. And then I'd see the owner of the company in Mammoth skiing retired. I'm like, damn, I missed it. Like, this guy's is retired based on this technology we built for him. So that was what sort of gave me the itch. We were also building a lot of mobile apps in the early days with coins and tokens and so forth. And all of these games just had tokens that would work within their own game. And I always thought to myself, if there was ever a token that could that could go across all these different games, wow, how fabulous that would be. That would be like the holy grail of virtual currency, if we had something that could work in all these different websites. So fast forward now to we're building e-commerce websites in 2011. And anytime I got anything in the virtual currency space, Brock Pierce, who you mentioned, was always my go-to guy. I've known him since probably about 2004, 2005, and smartest virtual currency guy I knew. He knew all about in-game purchases and all these different things. I said, Brock, one of my customers wants to put in a Bitcoin blockchain system, and what they want to do is they want to use it as a loyalty program. So if somebody comes and signs up for the site, they'll give them a certain number of Bitcoin. If they get somebody to comment, they'll reward them with Bitcoin. So I'm talking to Brock, and we talked for about 45 minutes. And he says, it's just not that interesting yet. There's not enough people. It doesn't have that sort of network effect. It's too soon. So I put that on the shelf. And about a year and a half later, my wife, who we were also building a website for, she says, hey, I want to integrate Bitcoin as a payment system. I'm like, okay, well, I'll assign one of my engineers and I'll have them go out and look. At that time, there was a company called BitPay that would do all of the work for you. All you had to do is call their API, and you could, they would take the Bitcoin and they would give the merchant all the cash. Pretty easy, right? So I assigned my engineer to this, and he stays up all night. He comes in the office the next day. He's got red eyes. He goes, we need to stop everything we're doing and just go into the Bitcoin business. At this point, I'm doing projects for Sony Pictures. I've got projects with CAA. We're doing, big, large-scale, projects. All work for hire, meaning they all own it at the end of the day. So I said, okay, why? And he got into a description very similar to what we heard earlier of this is that actual currency that can go across any one of these sites, and nothing can stop it. Governments can't stop it. Borders can't stop it. Corporations can't stop it. It is a truly decentralized system. And once I got that aha moment, we started winding down our projects, and we looked at the market. And I spent a lot of time searching for what was the right thing. Did we want to be an exchange? Were we going to be a wallet? Where was the money going to be made? And so I spent a lot of time with Brock at that point, and we decided, we're going to create a company like BitPay, but instead of just making it Bitcoin, we're going to let it take any token. We're going to take any of these new tokens as they come out, because why just leave it and let it be about Bitcoin? So what we did is we launched the service, and soon after that, we announced Litecoin. And all the Bitcoin people, this is like a religion now. You're now in a religious war. All of the people that love Bitcoin, like, oh, heresy. How could you possibly take this other sloppy coin? This is like fraud. Oh, but Bitcoin isn't, but Litecoin's a fraud. It's just open source code. It's just software. So if people want to use it, why not? So our business plan became, let's go to all of the Coinbase and BitPay customers and say, why would you just take Bitcoin when you could take Litecoin, Bitcoin, and there's this new crazy thing called Dogecoin. Let's take that too. So that was just the early days of GoCoin. And we were pioneers, certainly at that time, but it's a business that we took a different approach. We took a very lean approach, and it's been profitable for about 3 years, but it's not the unicorn. It's a Clydesdale. It's a great Clydesdale, makes money, but it's not going to make a lot of money. So what did I do? I decided in March of this year, I was fully vested, had my 4 years in as CEO and founder, ran the company, got it to profitability, and I turned it over to my CFO. She's now running it, and it just runs. So now, of course, we're going to do an ICO with it, because why not? But I'll get into that in a minute. Factors of blockchain, we covered that. I think we will go here. Ooh, I got a little wraparound here. Difference between Keynote and PowerPoint. Anyway, so when you look at what's happening, I'm going to now switch over to where my block hat. So what I recognized in the market was we thought we were so late at GoCoin with this payment thing. You know, BitPay was out there, Coinbase was out there, we were the third guys in, but we were able to make a great name for ourselves. But payments wasn't really catching on the way we thought it would. We thought we'd have Domino's Pizza, who we were talking to, Walmart, who we were talking to. We thought these big major retailers were going to come on in droves, and they were just going to start using Bitcoin. Life was going to be good. No. Where did we end up? Any guesses? Porn. Adult. Gambling. Ponzi schemes. Fake conferences. My favorite fake conference was the one that I was speaking at. Yeah, no, I'm not kidding. I go to we started seeing all these payments come in for this conference somewhere in Eastern Europe. And I'm like, I'm speaking at this? They never contacted me. And so we realized the real key to knowing if it was real or a scam was if they were taking credit cards, it wasn't a scam. If they were only taking Bitcoin, there was no real conference, but boy, did it look pretty. And they basically were scraping the screens from other conferences, making their own website, and running scams. So that's why banking hates Bitcoin. But banking is allergic to Bitcoin. And largely because there's not much in it for them. They know it disintermediates them. They know that it's going to be, they're protecting what they have and the margins they have. And the second they move to this new cryptocurrency world, they got to realize, wow, the party's over. Not entirely, but the party largely is over. So the big companies now, I've moved to Block, and Block is, it's interesting because when I first joined the company, it was all about enterprise. And think back to the early days of the internet when you had innovations like the Netscape browser, you had Alta Vista search engine, things you'd never seen before. Alta Vista was fantastic before Google. And so instead of wanting to touch that dirty internet, they would put it in an intranet. And the intranet would be where they could run all these great innovative things without having to touch all of these things that were going to cause viruses and Trojans and all these bad things that would happen on the internet. But they realized over time how to manage this, and before you know it, they're interacting between the dirty internet and not. So now, what I realized when Block had the vision, Jeff Garzik and Matt Rozak, the two co-founders, had the vision of putting blockchain systems in for private permission. Remember earlier we talked about public, no permission, you just join if you want to join. Private permission blockchains. It's like the intranets for blockchains. So, and every single one of them are doing it, and I can tell you because I'm talking to them. And we're talking about use cases, and we're talking about projects, but we're now moving into, they want to go into production. Well, how do you go into production with this thing that's supported by 1,000 open source developers, volunteers? They're not paid to keep this code up. They just volunteer because they love the project, they're interested. So what Block has done is we're putting these private permission blockchains in and now putting SLAs down and supportability so that now they can rely on a team versus having to rely, but still getting all the innovations of all those developers that are out there. So the way we see it is the early stage is going to be a lot of data sharing, time stamping, cross-border payments. They're looking at cost savings, they're looking at efficiencies. That's the first and sort of the step of where they go. Then there's going to be a layer of innovation. You're going to start seeing that kind of about 2019, 2020. You're going to start seeing some new innovations come about. And then we're going to see transformative businesses that really just start to change the way you do things. So in the example earlier, we talked about the ICOs, the tokens, token sales, and so forth. So where it really gets interesting is if you think of the tokens, like, you remember the old arcades you'd go to? You'd put a bunch of dollars in, and they give you these tokens. And you end up going home with a bunch of the tokens in your pocket because you didn't play enough games. And then they get useless and they're worthless or so forth. So think of these new ICO token sales. And if you want to play the games, you have to get those tokens. Those are the only tokens that will work in this game. But you really want to play those games, right? So you want the tokens. So you would go buy tokens. You'd go play the games. You go bug your parents for more money. You go get some tokens. And you play some more games. And that's a cycle of use that worked, right? So you think about Bitcoin in the early days, why did Bitcoin gain popularity? Silk Road, exactly. Cycle of use. You want drugs? You go get Bitcoin. You get your drugs. You go get more Bitcoin. You get more drugs. The cycle of use is there. So if you look at these ICOs and the ones that are coming out, the ones that are really, really going to kill it are the ones that have that cycle of use. So if you look at an ICO and go, why do I need a token to, let's just say today, not in 20 years, because in 20 years this will absolutely happen. Why do I need a token to get title insurance? You don't yet. You don't for a couple years, for 5 years, 10 years. I don't know when it happens. It happens eventually, but right now I don't need a token to get title insurance because I just get it through the escrow company. And there's a lot of complicating factors to when those things happen, all right? But I'll tell you one that I love. It's called WAX, the WAX token. And why is that one interesting? So what they sell is, kids play games? There's probably one kid who's the college kid, he plays games. Right, I know he does. Anyway, but your kids probably play games, grandkids play games. However, kids love these things and they're called skins. And the skin is, you have your character, but you want your character to wear a cool outfit. Okay, or he has a certain sword, or the sword can have a different skin on it that makes it look different, right? And why is that cool? Because you play against your friend and you're cooler than him because you got the cool sword with the cool skin on it, right? Kids love these things and they pay hundreds of dollars for them, right? OpSkins has the market already cornered, and they have the ability, because there's so much demand for the product that they want, that they can sell their token and say, you need our token. The best deal you'll get is get this token. And I guarantee those kids will figure out how to get that token to get the better deal, because they are that generation. They'll just figure it out. So they basically take away the other payment options and make this the best way to pay for it. They'll be very successful, guarantee it. Then I can show you 100 of them that are going to fall flat on their face. So the bottom line is it takes about somewhere between $5,000 and $5 million to launch an ICO effectively. And so let's just say it doesn't cost that much relative to how much they actually raise. If you put $5 million into it, you probably have a very serious token that's going to be, that's probably overstated. Let's go back to maybe $1 million is probably the most anyone spends to really launch a token. That's still a lot of scratch to put in, but when you get a $50 million raise, it's a pretty good deal, right? So, but most of them are putting 50, 100, and kind of trying to wedge themselves into this space. And most of those will go back to zero. If you can't solve the problem as why does somebody need that token, it's going back to zero. My personal opinion. Just getting back to who got into the space, I'm going completely out of my own order, but she's already covered most of this material. Her slide was better on this, but this was one I had from December, right? Just to show you what it looked like when ICOs first came about. At this time we had the biggest ones out there were, Genosis raised $12.5 million. The Dow, which was the first big major one, raised $150 million. But look at it compared to venture capital. But you see that these token sales now, jumping forward to today, I think you said $2 billion, which is a little higher than what this slide was. But each of these guys, Bancor, EOS, Tezos, each of them is betting on the fact that they have a model that they can convince people will be the way that people need to transact in that ecosystem. And some of them are going to be right. Some will go back to zero. But the ones that don't go to zero are going to magnificently change the world. Because here's a great example of why these things are going to get valuable. We run an Airbnb at our house in Malibu. And one of the problems we have is it's a big house with a lot of glass in the front. And people will just, we get a call from the people renting the house and say, the house is just too hot. We can't keep it cool. So we send the air conditioning guy up there. And he goes up there, he goes, your 8-foot sliding glass door is wide open. Why do you think the house isn't getting cool? Right? So how do you solve that problem? What do you charge people? Because some people aren't that stupid to leave the big sliding glass door open and having the air conditioning the outside, right? What if you had a token say, you get this many energy tokens. You can cool the house, and when you're that's what it takes based on the last 20 guests we've had, that's how many tokens. If you want to run more air conditioning or the pool heater or any of these other things, you just need more energy tokens. Okay, so think about that. Then you say, that's the only way you can run this system. That's an example of the way that the token economy will start to work. you're going to see the entire internet start to run this way. Because people are saying this, blockchain's more disruptive than the internet. Is it or is it not? We think it's sort of the same. I say, no, blockchain's going to disrupt the very foundation of how the internet works. Because this whole token economy is coming, and it's coming in a big, big way. We're going to see this in every aspect of life, that there's just tokens, and they're running on your phone, and you don't even know what it is. It's just, you have this many credits to run whatever you want to do. And the things that you really care about, the ones that will be successful are the ones there where there's not another solution. Bitcoin, for example, in our time of running the payment company, we did 100 million in transactions. That was probably 15, 20 million transactions. So a lot of those were low dollar value. Terrible transactional currency, especially for low dollar value. Okay, so another currency will take that spot, unless Bitcoin solves some of those problems. But it doesn't look like that happens anytime soon. So you're going to see that the ones that are going to be successful are the ones that are going to take over. So just flipping back now to the ICOs. So what you're looking for, if you're going to be, you don't want to say investing in these, because that's the wrong word according to all the lawyers. Nobody's investing in this. You're not promising any future earnings of the company. There's no promise of what you get in the future. You're betting that those tokens you get, that you put the dollar in, get those tokens, you're betting those tokens today can play $1 worth of games. You think in 6 months it's going to play $2 worth of games, $5 worth of games, $20 worth of games. And that's what you're banking on. It's not the future earnings of the company. It's the value of the token relative today to what it will be in the future. All right. So what you want to look to is, who are the people behind it? Who are their attorneys? Who are the regulatory people that are looking at this? If you go to, if you hear about this really great ICO that's coming out, and you're not sure if you want to buy into it or not, or participate, I think this participants, those are the right words. If you're not sure you want to participate or not, these are the things you want to look at. Okay, you want to look at who, if you don't see any names of credible people on the list, it's going to be more of a scammy situation. Okay, you want to see pictures of people. You want to be able to verify who they are. You want to see their LinkedIn profiles. You want to see, be able to tell that they're actually real, that they've done things in the space, that they're actually, people that are participating. There's Reddit. There's CoinDesk, Cointelegraph. There's a bunch of different media outlets that will sell a lot of information. Smith & Crown is my favorite resource for learning a lot about the token sales and sort of the teams behind them. So that's what I had. Quick little advertisement here on Block, just to tell you a little bit about the founders. So Jeff Garzik has been at the sort of the focal point of this SegWit 2x. Anyone know what that is? 1, 2 people. This is the scalability problem of Bitcoin. In the early days when I started doing payments in Bitcoin, it cost about a nickel to send anything from $100 to $10,000. Maybe a nickel, sometimes a dime, sometimes 20 cents. It's gotten so much congestion on the network that you have to compete and raise your fees when you're sending to get the miners to even care to pick it up. We've had literally days and days where we've had transactions sitting out on the blockchain, not getting picked up because the transaction fee was too low for the miners and there's too much competition. So this is the free market. So Jeff has been trying to get the consensus among the big companies in the space to make some fundamental changes to change the scalability factor so that we can get back to more reasonable transaction fees. And the rub with that is what that also does on the other side is creates more centralized power for the large-scale miners. So it is a bit of a catch-22, and I understand both sides of the problem, but I do believe that by doing this scalability change that we're going to fundamentally help Bitcoin last or live to die another day at least. So otherwise, the reason Ethereum has gotten so popular was because of this whole drama that's unfolded. So Ethereum was given, has gained in market value. Thank God, it's been great. I got on the crowd sale because of this little dispute. Matt Rozak, one of the early investors in this space, he's another one of our co-founders. He invested in a lot of the early wallet companies, exchanges, one of my investors at GoCoin, which is how I knew the team. But we also have a good group of investors, and almost everyone on this whole sheet has been accused of being Satoshi Nakamoto, especially Jeff. But he's not. Nick Szabo might be, but I don't think he is. Gavin Andreessen and Jeff were two of the early, what they call core developers. That means they were the guys in the early days that were contributing to the project when Satoshi Nakamoto was still involved. And somewhere around 2013, he sort of drops off the grid, and no one's heard from him. So there's a lot of speculation about why he dropped off. And nobody really still knows exactly the story. So our vision is that, it's all about open source code. There's a bunch of proprietary blockchains that are popping up. IBM has their flavor. Various other large organizations are trying to put their centralized versions. And my question is, the whole point of this is to be decentralized. Why are you going to now centralize now with IBM and be reliant on them? So we're about open source. Everything we do is open source. So if any of our customers at any time says we want to go our own way, take the code. Go create your own. Do your own thing, but we're going to continue to support it. We feel that our army of thousands of open source developers is more powerful than your 20 developers. We believe in decentralized. We believe in enterprise class security and interoperability. We know it's going to be a multi-network, multi-token, multi-chain world, and that goes with the same ethos I started my company with before. So we had really great alignment, believing that we're not going to see one token or two tokens that survive. It's going to be hundreds of tokens that survive, right? I don't know if it's going to be thousands, maybe. We'll see. But I don't think it's 5. It's not 10. I think we're going to see some that are still the big powerhouses, but that's my 2 cents. So I'd love to open it up to a bunch of questions, turn her mic back on so we can equally answer.
Outstanding, Steve. Thank you. I'll kind of guide the traffic.
It's yours? Sorry.
That's all right.
I think we have a couple mics floating around.
We need wine and water up here.
Water.
You had your break, okay. So back row.
I have a question about the Fed and Bitcoin.
Where are
What do you?
Oh.
Question about the Federal Reserve and Bitcoin. What do you think? How do you think the Fed will react to it? Will they do their own Fed coin? Is this a threat to Bitcoin?
Do you want to field that one, or shall I?
No, go ahead.
I think we'll absolutely see government-issued cryptocurrencies. There's no doubt that will come. How successful they are, we'll see. I think that I also am one of the founding members of the Chamber of Digital Commerce in Washington, D.C. So I sit on the state-by-state working group as well as the Token Alliance. And so I see a lot of the chatter that goes back and forth. And they're the main group that's doing most of the advocacy with the federal government. So it seems like the CFTC is leading the charge in terms of the regulations. They're calling it a commodity. But I do see a lot of potential of currency issued by governments, and they're going to want to control it. I don't know how successful it'll be, though. Remains to be seen. I don't know if you have an opinion.
It's all about decentralization and not having a single point of control. But I think that regulation equals validation. And so whether they come in and regulate Bitcoin more or create their own cryptocurrency, I think it's all positive for the system because it validates it.
Yeah. I mean, one of the things, we had a lot of debates back and forth with attorneys in the early days at GoCoin. Should we register with FinCEN? Are we a money transmitter? Is it money? And out of abundance of caution, we decided to file with FinCEN. May have been a mistake in retrospect, just because you then now have a bunch of regulatory things you have to adhere to. But I think most companies in the space that are credible are already self-regulating to a large degree and very abundantly cautious, almost too cautious.
It seems the efficacy of this is based on the cost of computing some It seems like the effectiveness of this is based on the cost of computing these hashes. And I'm wondering what you see the effect of quantum computing hitting in the next few years on the security and the stability of the coin.
Yeah, I think we'll stay one step ahead. One of the things that it would be completely counterproductive for everybody, even somebody who could crack brute force the cryptography. Even if they could brute force it, to what end? You have to ask. I mean, so you start ripping Bitcoin off, and the whole thing is going to collapse in a moment. So the industry as a whole, or the miners, have always cooperated really well with each other for the most part. This one scaling issue has been a very big sticking point for over a year. But anything that would be threat to security, the miners have always very quickly all stepped in, all agreed. Here's the date. We're going to fork. So I think whatever the steps are, it's just going to, they'll just stay ahead of it. That's my opinion.
Since Visa and MasterCard are probably processing most of the payments currently, and they're pushing for a cashless society, how is this going to impact what's currently going on?
Dead men walking in my estimate, but that's just wishful thinking.
And they both have investments in the space.
Of course they do. So it's interesting that the Visa recently made an announcement where they basically were paying an incentive for merchants to not take cash, which I don't know how you do that because it's legal tender. How can you say, I'm not going to take cash? But nonetheless, Visa made this big announcement. They're going to pay $10,000 a month to merchants that did this. To me, it's just more protectionism. And I think that they also realize their margins continue to be smaller and smaller and smaller. And so there's no reason you need to pay 3% for payment processing fees anymore. Chargebacks isn't as big a problem as it used to be. But these cryptocurrencies completely eliminate all sorts of problems. Credit cards weren't designed to go on the internet, period. This is designed to go on the internet, from day one, and it is massively more efficient.
Well, I think it would be interesting, too. I think you'd have greater adoption by merchants if there was some incentive for customers to use it. I mean, for a merchant to use it, there's a benefit for them because it costs them 1% versus 3%, and there's no risk to them. They're getting paid in dollars. But there's really still no reason for developed country consumers to use it unless they pass on the cost savings to us.
Now, there is one interesting piece of legislation that I know of through the chamber. There is a bill out that's asking that anything below $600 paid in cryptocurrency would not be a taxable event. And if that piece of legislation goes through, that's a game changer for payments. Because I literally, when the IRS gave their guidance that everything's a taxable event, our payment processing numbers went in half. And it was really a sad day because they just crushed our industry just with that one announcement. Nobody wanted to worry about paying for tax on a cup of coffee.
Right.
Oh, sorry.
The price volatility of the cryptocurrencies is, in my opinion, one of the biggest reasons why businesses aren't going to accept cryptocurrencies in the near term. Do you guys have a solution to that, or do you have any thoughts against that opinion?
Well, that's exactly what GoCoin did, is we took the volatility out of it. All they had to worry about was if it was a $100 transaction, they're getting $99. We took all of that risk away. BitPay did the same business model. Most merchants don't want to deal with the complexities of cryptocurrency at this point. It may change at some point. I think sometime in the next 5 years, we're going to see a stable coin that actually acts like Tether. Tether was a great idea, not such a great implementation. But, it served its purpose quite well.
Yeah, and I think for Bitcoin, if people want to use that as the mechanism for commerce, if you think it's going to $25,000,
No way you're
who
spending.
wants to spend it? And there's something called hodling, where you're not necessarily a holder of Bitcoin.
I couldn't find my shirt today. I had one.
Oh, did you really? But you're a hodler, H-O-D-L. You're holding on for dear life.
Yeah, it's a very enthusiastic inside the Bitcoin term.
I have a question regarding Bitcoin IRA. I'm sure you guys have seen them on the internet. And Sherry, this might be more up your alley.
Bitcoin what?
Bitcoin IRA.
Oh, IRA, yeah.
So if you had a self-directed Roth IRA, and because the IRS is treating it as a commodity, you can technically do ICOs and Bitcoin and Ethereum in your self-directed Roth, correct?
I would absolutely, if you can have exposure any which way, I mean, it depends on how, you should only have a certain percent, a small percent, but I would have exposure.
Yeah, I agree.
There's a company that's doing those.
And they only do Bitcoin IRA. That's why they only do Bitcoin, and I think they're adding Ethereum. But, obviously, I think there's other avenues that you can go with the ICOs and have greater returns.
Yep. Tend to agree. I used to say 5% of your portfolio should be in coins, and now that 5% is 25% of my portfolio.
25%. I was going to say 10.
So I wanted to ask about international trade in particular because I think there's two real issues that this can solve. One is just the intermediary, the man in the middle, that banks are taking the 3% cut, and they're also determining the conversion rates between currencies and stuff, which I think this can solve. And the other is just the volatility of currency conversion, which I was personally a victim of in 2008, 2009. So the ability to define a conversion rate now and pay for it 9 months in advance, it seems like a perfect use case for this. So I wonder if this is actually being used right now, and what is the reality of in the current world?
I think you're closer to probably
Yeah.
BitPay and
Yeah, so FX netting is one of the things that I'm seeing a lot of demand for. And what that is, you take your supply chain and you have all of these different folks that owe each other, and everyone's sending their individual wires to pay. At the end of the day, you really only have your margin that's really due to you. So what we're looking at these consortiums that will come together and just say, at the end of the day, what does everybody owe? And reduce all their fees by using the cryptocurrencies or a closed loop token permission blockchain to say, okay, end of the day, I have this many tokens, now I have this much, put it in my bank account, and we burn those and they're gone. And so I am seeing a lot of use cases with big shipping companies. I'm seeing that with beverage companies. I'm seeing it with you name it, as there's all sorts of big companies doing that.
Question. What are your thoughts on third-party reporting, and how, is that sort of a benefit to investing in Bitcoin, that there isn't currently any third-party reporting to the IRS about the taxability of these gains and losses and things? And is that going to change in the future? Do you think they're going to start requiring third-party reporting? What do you?
I certainly think they'll start requiring it. I mean, it depends how they classify it, but I know there's companies that are actually looking to create some kind of accounting mechanism where when you spell
Libra is one of them.
when you use it, I mean, you'll right now there's no 1099 that you get at the end of the year, but I think that'll come.
Yeah, it might be, that probably is going to come through the wallets, or the wallet companies.
Right.
Airbits, I know they have a little thing that you spend it comes up with this little expense thing, and you can put it into categories of what it is. The innovation's coming, but you better believe it's on my taxes, because I already know that if they're going to audit people, they're going to audit people that are in the business. So it took me 3 days to get my tax stuff together, because I was using that Coinbase credit card that took my Bitcoin out, and so every single transaction I did, I was like, oh, I love this, is great, until tax time. It sucks. It's painful.
Yeah.
If that $600 rule would solve
be
that whole
amazing.
problem, it would be so nice. In fact, I sort of, even that legislation's out there, I've kind of adopted the $600 rule.
Very interesting conversation about this thing. I think applicable to most of this group is the ICOs. And you guys have all spoken, it seems like glowingly about it. And I realize it's a very changing world, but it seems to be a scam.
right now. I mean, it seems to be a
You're one of
focus-
the emperor has no clothes people.
Well,
aren't
I don't
you?
know. I'm just curious because it doesn't seem as glowing as I would take away from your guys' talk now, and I'm wondering, I understand the aspects about it, but I'm looking for a little bit more reality statement about why there's so many failing right now and why so many countries are invalidating it and why hovering over there, the United States is just saying, kind of like the Price Waterhouse tax scam of taking things offshore a couple of years ago, it's going to come back and just devastate a lot of investors. And more importantly, I wonder if it's an attack on crowdfunding, you know, aspects, a way of traditional VC kind of devastating alternative investments in companies.
All I could say is in a presentation somewhere in the future, you're going to have a quote from him.
Yeah. Well said. Yeah, I think this is the next evolution of crowdfunding. In fact, Chance Barrett from Crowdfunder down in Venice is heavy into the space now. In fact, he's not even doing the Crowdfunder thing, you know, to the same level that he used to, because he's in the ICO business. I just think this is the next evolution, and it'll have another evolution beyond this. I think if you remember the days that these websites were coming out, and it was very popular to have a website, and everybody, got all this traffic, then there got to be so much noise that you just couldn't go to all the sites. I think it's like that. There's just, at some point, there's so much noise, you hit a saturation point, and then it's only the real high-value ones that bubble to the top, and the rest are just noise.
I think the parallel drawing to the mid-'90s and adoption of internet commerce and whatnot is a good one. And there's a really famous Newsweek op-ed piece in which, you know, one of the writers is quoted as saying, okay, so sure, you know, we're going to buy everything on the internet, we're going to book our reservations and air travel and so on and so forth, all through the internet, right? So explain to me why the commerce conducted on the internet in the last 3 months is less than the commerce conducted at my local mall in the last 2 days. And it's just, you know, there's an adoption period, right? So anyway.
Question about kind of bridging the gap between mass consumer adoption. So the benefit to the businesses are really clear. So the transaction fees from 3 to 1%, totally clear. No chargeback protection for the business, no disputes for the business. That sounds beautiful. Now, flipping to the consumer side. So if I go to register for a conference and I think I'm going to go see you, and I pay $200 for a transaction, then there is no conference. I have no chargeback to file. I have no consumer protection for the transaction. Right. Issue one. Issue two is the point system. So the incentives that they're used to for the cards, all the points and all the kickbacks. So as interchange and the cost of credit cards exist today, as risk goes up, the cost of the transaction interchange goes up. As the reward goes up, it also goes up. And the two components assess the actual true wholesale cost of the credit card. So how to bridge that, to capture all of those, the rest of the mass consumer adoptions, is anybody working on that issue?
Do you think the Coinbases of the world and the GoCoins are going to
To
play
some
that
degree,
role?
yeah. I mean, we spent about 1.5 years trying to put a loyalty system in because of that exact problem. I look at my own behavior and say, why am I using my credit card now instead of Bitcoin? Oh, I want the air miles. And so exactly right. So we tried to do that. It was not as easy as we thought it would be. Ended up just pulling the plug on the project. Consumer protection is a big issue. Most of the merchants that get into the business, they're used to taking care of their customers, the overstocks of the world. And so I've had to do a return on overstock. And it actually hurt me pretty significantly because by the time I had the return 30 days later, there'd been a big spike in the price. So I got a lot less coin back than I would have gotten otherwise. But
I think it could be safely said by now that the internet security has been a complete failure. So, and that, I mean,
you mean the fact that the
it's
NSA
going in a
can't
very
safeguard
ugly
us?
place. What's that?
I said the fact that the NSA can't even safeguard our information.
Excellent example. So can blockchain be the answer to securing the internet from the most talented hackers?
Yes.
In what period of time?
I believe so too. I think that Social Security, your Social Security number now is now your public key, since we've had the Equifax hack. But with that, we're going to see. I think it will be a blockchain solution that replaces for Social Security how our identity is managed. And that's a huge, huge problem right now. It's funny, I recently had a shoulder operation. I had to go through, and they want my social security number at every place. I used to never give it to him. Like, whatever, take it. Everybody has it
Probably
anyway.
have it already.
I think that'll take.
How long do you think that would take, Steve?
Oh, I don't know, would you think 3 to 5 years? Probably 5, because it's government.
I've been reading that the Bitcoin is a hard fork coming. Can you take a moment and explain what that is and what their dangers, potential dangers are involved in a hard fork, and what the different resultant scenarios may be?
Do you have that one? No?
You're more technical than I
I'm
am.
not sure, but we'll try it. So the
Well, there already was a hard fork.
yeah, there was already a
With
hard
SegWit.
the SegWit fork. Wasn't that a soft fork?
And so, no, there was in July, Bitcoin got an upgrade with SegWit. And SegWit is essentially taking out lots of data like the signature, which took up 60% of the volume
size.
in a block. So if you get rid of the signature, which isn't an important detail for the transaction, then you can fill up the block with a lot more transactions. So there was dispute in the community, and there was a hard fork, which means that this blockchain is no longer backward compatible with the new blockchain. So,
But they both survive. So both
Right.
blockchains go forward. So you have 100 coins on the Bitcoin. You now have 100 coins on Bitcoin Cash. But so you're now participating on both. But the history going back is the same. But now from that point forward, you lose compatibility. You understand? But you're participating on both as a coin holder.
And now, by November 19th, I think it is, there is a proposal to see the block size, not only to make each transaction less data, but to double the size of the block. And there's dissension. So if the miners don't all get consensus and adapt it, then you might see another hard fork.
Yeah, so think of it this way. I have the cup right here. And so it used to be that every transaction took up this much of the cup. And when the cup, basically, and during that time, the miners are trying to solve the problem. The cup might be this full, and the miners solve the problem, and that block gets cemented in history, right? Sometimes the cup just overflows because there's too many transactions, but then somebody solves a block this size, but you've already started another cup being filled up. So what the 2x portion of this is, they want the cup to be twice the size. They're just going to double the size of the cup. But they've already done the SegWit part, which makes every single transaction smaller. So there's smaller pieces. Every single transaction, less data. Make sense? Most likely.
What is it?
Will it be another, we're going to have
Oh,
another
yeah.
split. Most likely we're going to, all they have to do is provide enough mining power into the new chain that it gets enough support, and you'll have a new coin. You can fork a coin today. Anybody can fork Bitcoin tomorrow. You just have to convince.
Litecoin or Dogecoin or forks of the original Bitcoin code.
Right. Well, not quite though. Not
So
quite, because
I-
Litecoin was a brand new coin with a new Genesis block. When you have a fork, you basically have two chains with all the history, and then it forks into two coins. So the history from that point back is exactly identical. So Bitcoin Cash before whatever the block where it forked. So it was entirely the same. So we'll probably do that again. But you could try to fork Bitcoin right now, but unless you can get enough miners to care, you can't process. I mean, you need enough processing power to be able to solve a block within 10 minutes. You don't have that much. So when Bitcoin Cash forked, initially you were seeing large block times like 3-4 hours because there just wasn't enough mining power to keep it going. So at some point it might just stall and then your blockchain dies.
And I just want to point out, like, all this forking, it's progress in improving the code and the open source technology. But just, remember back to the internet when, I'll never use the internet. There's porn on the internet. I won't let my kids use it. I'll never put my credit card on the internet. You'll never be able to stream a movie on the internet. The bandwidth isn't there. So for every issue that there is with the internet or with blockchain, there's a company that evolves and makes a business out of solving that problem.
That's a great point. That's a great point.
So we have time for one more, actually. I know we could talk all night, and appreciate the energy and enthusiasm of the crowd and Steve and Sherry. But last question. Sorry, guys.
So I've got a question from an investment perspective. I'm not an engineer and I'm not a tech guy, but I'm concerned, and I'm going to be devil's advocate for a second. I'm concerned that Bitcoin has the potential to crash. And I'm looking at you two experts as what your opinion might be for that, and if it's tied back to the miners in some way, because you had mentioned that there's this declining revenue model for the miners over the next 10 years or so. If that's going to be incentive for them to jump ship, and it's going to be another coin that becomes the new Bitcoin.
So again, I think whatever problems the Bitcoin blockchain encounters, there will be solutions that come about to keep it resilient. And I honestly think that if Bitcoin doesn't survive, it's only because another cryptocurrency that was better replaced it. But right now, Bitcoin has the network effect, and it's been the most resilient and the most widely used. If there's something better that people immediately adapt to, that could be the demise of Bitcoin. But otherwise, I think that the developers will continue to iterate and develop improvements.
Yeah, now I love when it crashes. That's my favorite time to back the truck up and just get more, because I'm all about accumulating
Hodling.
Bitcoin. I accumulate Bitcoin, I accumulate Ethereum, and I use all of these other altcoins today just to buy more of those. So I may participate in a crowd sale, but I'll usually take whatever I invested into it and a little bit of profit and move that back into more Bitcoin, more Ethereum, until I see one of these other guys get network effect. So basically, I use sort of the billion-dollar market cap level. Anything below that, it's just a total speculative trade. Things that get above that billion-dollar mark, I'll accumulate, like Monero, I'll accumulate Dash, I'll accumulate others like that. But I think that you'll have time to get out of Bitcoin before Bitcoin would go to zero. Now, I can tell you this one big lesson learned in the early days of GoCoin. We're so hyper paranoid about our keys and key storage and all this stuff, and we had these really tough, long processes, because time is your friend when you want security. So we had these long time processes to get our coins out of cold storage. So we had a bunch of coins sitting in cold storage, and Mt. Gox happened. And it took us 3 days to get our coins into trading positions. We took a bath, just an absolute bath. So one thing to remember is, even if you want to be able to get your coins into trading position, I don't suggest keeping a whole lot out on exchanges. I keep 10 to 20% of my coins on exchanges at any time, but I want to control 80% of my coins.
And I think the speculation is that Bitcoin has recently risen in price in conjunction with the ICO activity, because a lot of people are doing what you're doing.
Right. Yeah.
They're making a ton of money on these ICOs, dumping them, and buying more Bitcoin.
Yeah, I kick myself. If I hadn't sold any of my coins, the ones I just accumulated, I'd have close to $100 million now. But, you know, I used to go to conferences like this, and I'd give, Bitcoin away. Anybody want some at the end? Sure. I gave some at my college in 2015. At that time, Bitcoin was in the, 250, 260. I gave every one of the students that came to the talk, like 30 of them, 0.1 Bitcoin. I don't know if they lost it, if they sold it, they bought beer, who knows.
I'm the favorite aunt. I've given that for bar mitzvah presents.
Nice.
The $118 investment 2 years ago is now worth $2,000.
Great. Yeah. I've done that one too. My favorite story, though, is my buddy is a partner in a big downtown LA law firm, 300 attorneys or so. We go on a guy's golf trip back in 2015. And I said, and at the end of the trip, I owed him $3,000. I said, Tony, you don't really need the money. I'm going to do you a favor. I'm going to give you Bitcoin. It's like, whatever. What do I need to do? Just get a Coinbase account. So I give him about 10 Bitcoin at that time, which is $3,000. And about 6 months ago, I called him up. I said, hey, Tony, have you looked at those coins I gave you a couple years ago? He goes, what are you talking about? I said, remember the trip? I gave you Bitcoin? He's like, I have no idea. I'm like, I think you had a Coinbase account. So he finds, forgot my password, goes through, gets into his account. He's like, holy shit. It was, at that time, $24,000.
Oh my God.
So he sold half of it, which I told him not to. And he took my wife and I and his wife on a trip up to Oregon, wine tasting. We had a great weekend. But if he hadn't sold it, his 10 Bitcoin be now $55,000.
Stay tuned. So thank you very much, Steve, Sherry. You guys were awesome. Thank you, crowd. Yeah.
Good job.
And,
Cool, great.
Michael,